So before we look at start looking at these end of wave projections, let's just take a real brief review of basic Elliott wave theory. So Elliott waves, there's two different kinds of uh, things we look at, and number one is an impulsive wave, and you can see one in front of you. Bearish ones are the exact opposite. Excuse me for my grandfather clock going off. And you can see uh, each of these waves right here. You can't see it, but these are all 5 waves up, the impulsive waves. 1, 2, 3, 4, 5 up. This one's 1, 2, 3, 4, 5 up. And this one's 1, 2, 3, 4, 5 up. So there's fractals and these impulsive waves within the impulsive waves. So that's an impulsive wave. A couple of Elliott wave rules that we always have to keep in mind. Wave 2 here cannot go below beginning of wave 1. If that happens, this is not happening. The other rule is wave 4 should not pull back into the range of wave 1. That can happen sometimes, and we call that a diagonal, but we're not going to cover that today. And the other rule you have to remember is wave 3 here cannot be the shortest wave. It can be equal to 1 or it can be equal to 5, but it cannot be the shortest wave. So next thing we want to look at quickly is a correction. And corrections are 3 waves down. It's A wave down, B wave up, and C wave down. The A wave is usually 5 waves. C wave is usually 5 waves. Inside this B wave, it's usually 3 waves, but the whole correction itself is 3 waves. So you'll see that here. This is a correction. It should be 3 waves. This is a correction. It should be 3 waves. So now, most of you, I think, have been through a basic webinar on how to use your fib tools, your retracement tools, and your extension tools. If you haven't, there's a little webinar over on the educational portal, and I have the link for that portal at the end of this presentation. So, any questions so far on basic Elliott wave theory? Okay, so let's look at these different waves. And what we're going to try to do today is give you guys a sense of where the target should be and for each of the waves. Okay, end of wave 1 or A. And to me, this is always one of the most difficult waves to get into because you really don't ever know where these things start. However, an end of a wave 1 or A will usually be at the end of the last section of the prior pattern. And I'll show you that as we get along. Wave 1s are usually 5 waves. So remember we looked at that in the Elliott wave impulsive waves. Wave 1 or A can be 3 waves, and we see that in their ABCs. So there's 2 different things they can be. They can be a 5-wave pattern or a 3-wave pattern. So just keep that in the back of your head. So let's look at things we can compute and can get a good our head wrapped around. So let's look at wave 2s. Wave 2s are corrective waves. Here's a wave 2 right here. So it's either going to be an ABC or some kind of complex correction. Wave 2s, more often than not, are ABCs. So when you look at this here, a wave 2 is computed from the bottom of wave 1 to the top of wave 1, and you go back down to the bottom of it and you put your fib levels in. So it could be 38%, 50%, or 61.8%, or 78.6. However, and this is on your cheat sheet you have 50 to 61.8 is a typical retracement. And that's more often than not than what it is. Now, remember, it can be deeper, but it cannot be any deeper than the beginning of wave 1. So That's an important thing to know. So they can be a complex correction, but more often than not, they're an ABC. Now, another thing in Elliott wave guidelines is if wave 2 is an ABC, wave 4 will probably be a complex correction. If wave 2 is a complex correction, wave 4 will be an ABC. That's called the guideline of alternation. So let's take a look at a couple charts here with wave 2s on them. If you have any questions about these charts, just stop me, and I've got it set up so I can bring over that chart live so we can look at it, I hope. Okay, let's take a look at a crude chart here. This is a crude daily chart, and we all know that crude has been on a little bit of a pullback, but here is your 5 waves up here, and you have an A, B, C down into 2. And look where it stops, 61.8% retrace right here. So in order to compute that, we just use our fib retrace tool, excuse me, and put those on there, and you have your wave 2 pullback. And when we get into some deeper things in the Elliott wave, we can show you how to compute these ABCs right here, or a complex correction or something like that. And you'll notice up here, since this was an ABC, this is going to be the wave 3 up here, and this is more of a complex correction than we had down here. So let's look at another wave 2. Okay, this is a chart on Visa. It's a weekly chart on Visa. And you can see here, I got 2 wave 2s on here. One up here, the wave 1, and had a pullback right here to the 50%. And we were looking for this wave 3 up here from the bottom of this 2. Had this wave 1 up. We had another pullback to the 61.8%, right on the noggin there. So let's look at one more. Okay, this chart right here, I can't believe I don't have it, but this is an Apple chart right here. And this wave 2 right here, pull back. Look at this, guys, right here. ABC, right down to 61.8%. It's not magic, and it happens a lot more than it doesn't happen, these 2 fibs right here. So if you've got a sense of this right here, you know a lot more than most people know about where these prices are going. So that's the wave 2s. Any questions on wave 2s? Remember, 50% pullback or 61.8% pullback. Okay? No questions? Okay, let's move on to wave 3 projections. Now, when you're trading and you want to get the best trade out there, you want to get into a wave 3. So the strategy is, if you can locate this wave 2 right here, and it's a 50 to 61.8% pullback, you know your max risk is going to be down here. So what you have to wait for, assuming this is a wave 2, you need some kind of trigger to get into the trade. And we won't go into that in this webinar, but we use triggers over in the ES Live chart room on a lot lower time frames than these charts. But that's how you trade this. And if you could have gotten in here with a trigger, let's say you even got in up here, you could have got in down here, and look where wave 3 ended. That's a pretty nice little chunk of change for you right there. So let's look at wave 3s and how we project the end of wave 3s. Okay, now don't everybody leave and run away from me, because it gets a little bit more complicated on wave 3s here. Wave 2s are easy. So what we do when we look at these wave 3s, and trading a wave 3 is fun, and trying to pick a top of a wave 3 is not so much fun. But what we can do is have some kind of idea where the wave 3 should end. So let me define something. This term right here, alternate price projection. And what that means is we're taking price from here to the top of 1, and we bring it down here for the third click, and that would be a projection up. Or we could take it from 1 up to 3, first click, second click, third click, and project it up. So that's what an alternate price projection is, as opposed to an external projection, which I'm taking 3 versus 4 and measuring like 1.27, 1.60, 1.8 above here. So that's the difference. So this is an alternate price projection, and from 3 to 4 is an external price projection. And the way you use that on your platforms, and this is what gets confusing. For instance, TOS calls these extensions, but what we use is alternative price projection. And by contrast, to get to 1.27 to 1.6018, you use a TOS retracement tool. So there's different languages or different nomenclatures across different platforms. But anyway, bear with me, and that's what we're going to use in here today. So how do we compute where we think wave 3 will come in? Okay, so most people use these alternate price projections right here. And what they are is they're computed. You start from bottom of 1 to the top of 1, click, bottom of 2, click, and you'll get these numbers right here. On your sheets, the most common projections are the 100% to the 161.8%. Now notice this is end of wave 3 or C when we're taking a look at these things. So if you click here, second click, third click, and you should get a number up here, 61.8 to 100% to 161.8 to 262%. Wave 3s are very hard to absolutely know when they are over, except when you start breaking these wave 3s down into micro fractals. And we'll learn about that as we go along in another webinar. Okay, secondary projections of a wave 2 or wave 3. Okay, what you do is you take the external computation from wave 1 versus 2 here, and you project that up. The other thing you can do here, folks, is wave 3s are 5 waves, 1, 2, 3, 4, 5. And if you're getting these fractals in here, 1, 2, 3, 4, you can take the 127 to 161.8 and here, and you'll get this number up here. So when you do that, you're going to get a zone up here for a wave 3. And I'll show you these in a couple charts after we take a look at this. Okay, the minimum C target is 61.8 alternate price projection of 1 versus 2 right here. Okay, typical wave C and minimum 3 are 1.61% of wave 1 or A. So that's the same deal, but the minimum. And both 3 and C, whether this is, let's say this is an A and this is a B, both C and 3 will subdivide into 5 waves. So I know that's a little much, but does everybody get the basic concept of that? And I'll show you some on a chart once we get to this chart right here, slide right here. So let's look at a couple graphs and maybe it'll make some sense to you. Okay. This is bonds. And this is a bearish chart right here. And you can see that I measured down from 1, pulled it back to 2 and clicked. And this is where it came in, right at 61.8, your target for 3. So if you have this information, look how it can help you to start saying, well, if I was short on bonds, what could I do to help my trade? I'd start trailing my stops down for one thing. So that's a bonds chart. It's same deal. Start here, click down, measure from here, and that's how you get to 1.61.8. You see it right where it came in right there. Now, if I'd gone down to a lower time frame chart, I would look and see how this wave 3 down was subdividing, and I'd use a 1.27, 161.8 extension 3 versus 4 of the microwaves in here. Okay, let's look at another one here. Okay, my friend Apple, our friend Apple. Okay, this chart right here, we start down here, up to 1, put our alternate price projections on there. And this comes in right here at 1.318, right below, that's right in the target zone for wave 3. And then we had the wave 4 pullback right there. But you can see here, I don't know exactly. Now remember, wave 3s are 5 ways up. I don't know exactly. I'd have to go down to a lower time frame chart, but the 1 and 2 is in here. But this sure is the micro 3, 4 in here. And if I'd put an extension tool on here and tried to find a 1.27 and 161.8, it would be in here. Now, that 1.27 and 161.8, you'll hear it a lot. And I know that there's a lot of traders who use that as targets. So when a lot of traders do something, that means there's a lot of orders there, and you can be sure prices are going to gravitate to those numbers. So those are 2 very important fib extensions you should be aware of. Let's take a look at one more here. Facebook. Okay, so same deal here. 1 up, 2 down, 3 comes in here right in the 138, 1.31.8 and 161.8 right here. So that's another good example of a wave 3 right there. So before we move on to wave 4s, do you have any questions? And again, folks, I know this is a lot if you just haven't looked at this stuff before, but the cheat sheet for these end of waves is over in the educational portal. George, in the previous chart. That one? Could wave 3 also be a wave 5? Well, since price took it out, no. I mean, if I hadn't seen this, what you can't see here, George, is it's hard to see where this 1, 2 is down here to get this 3. So if I were labeling this chart, I'd have another color here, 1, 2, 3, 4, 5. And that would be the 3 right here. Okay. So somebody asked me the other day about what time frame charts to look at, and a lot of times you start at a higher time frame and you got to keep dropping down to lower time frames till you see something that you can see the fractals on. These little subways in here. I mean, these are easy to see. I mean, there's no problem seeing those or not. I mean, that's easy peasy right there. So the reason I said that, George, if I didn't know what happened here, I would say probably, yeah, it could be a wave 5. But however, if I were looking at maybe a 60-minute chart, it probably would be obvious this was not a wave 5. But look at it this way too. In any case, you know that you're close to a top, whether it's a minor top or a major top right here. So you start tightening your stops up here when you got up to this 1.318 up here. And like I said, if I'd put the 1.27 and 161.8 on here, I'd also have another zone on here. And the other thing, guys, we're going to go into a webinar on how to use something called fib pinballs which will even help us more to get these target zones. And you will be amazed on how accurate they are. And I use those a lot in the morning updates with Al. So anyway, we got to get this out. We got to get this in our toolbox first. So let's go on to wave 4s. Oh boy. Okay. So wave 4 is what we're trying to figure a wave 4 is. We've got 3 up and we're trying to know when the wave 4 is over with so we can trade the wave 5. Wave 4s are the most cantankerous wave out there. I'm not saying I never trade them, but if I do, more often than not, I wish I hadn't traded them. So, and unfortunately right now, it appears to me that the indexes are in a wave 4. So a lot of people get chopped up in these. A lot of people get bounced around. So it's not a fun wave to trace. So basic rules of a wave 4, and you can't see it here, but on your cheat sheet, 38.2 and 50% will be in bold. So and you measure these wave 4s from the bottom from wave 2 if it's a bullish trade, and vice versa if it's a bearish trade. So, and that's basically, which this is the most important rule of a wave 4 right there. So alternate price projections of wave 2 projected from wave 3, 61.8 to 100% and 61.8%. And 100% is the number you want to look for. And what I'm saying there, guys, is if you're looking at a chart, and I'll show you when we get down to them, if you measure from the top of 1 to the bottom of 2, that's what they're talking about right there. And you take that up and measure it from the top of 3, and it should be around at 100%. Matter of fact, this morning over in the ES Live chart room, we had a wave 4 correction. We were looking at, and it almost hit this on the nose. Okay, minimum of wave 4 should be 38% of wave 2, maximum usually 61.8. But the two numbers you want to look for is a 50% and 38.2%. Smaller time frame charts, it's a 3-wave correction. So it's going to be seen as an ABC type move or a complex correction. Wave 4 is often an ABC, but more often than not, it's a complex correction. And remember the rule of alternation we talked about in the beginning. Let's look at some. Okay, Facebook. This is so nice. Such a nice chart. So you had your wave move up, 1 up. You had your 2 pullback right here, and you had your 3, and 3 came in right on the numbers we've been looking at. And look what happened here. A, B, C. Look where it pulled back to, the 38% retrace. Now, I don't have it on this chart. I should have. But if I measured, this is what I'm talking about right here, alternate price projection. If I measured, I clicked here and I clicked here, and I went back up here and projected that same move down, it's going to be one of those numbers, probably 100% or so. So this is another thing you can measure. Wave 4s should be greater in time and price than wave 1 versus 2. So if this took 5 days, this should take 7 days. If this was a $25 pullback, this should be right around at least a $25 or $30 pullback. So right here, you see something else that can help us on a wave 4. You see a nice A, B, C. So if you knew how to trade ABCs, you go, okay, I've got this 100% here. Let me put this 100% on here, A versus B, down to here, and put on my 1.27, 161.8. And you're going to have yourself a really nice tight zone to trade from right here. And look, if you could have gotten that, look at the money you would have made on that trade. Sweet. Okay, let's look at another wave 4 here. Okay, this is Microsoft. We went up, got our 3, had the pullback, and the minimum wave 4 is 23.6, and in this case, that's what happened. Now, I do have the 1 and 2 on here measured from right here, and that came in, it never hit that level right there. But that's another good example of a wave 4. Wow, that way gapped up today, didn't it? So let's take a look at one more wave 4, Amazon. I found this one this morning. A measure from 2 up to 3, pull back right to the 38.2%, and it's also close to the 100% of how much 2 went down right here, measured, click here, go up here and click from here. This was 100% right here. And this was an ABC correction right here too. And you could have captured a better target range if you'd measured A and measured that from B and see where you got over there, what you come in with that range down. Actually, B should have been over here, I think. You don't, no, over here is right. So that's another wave 4. So any questions on wave 4s? Remember, you take wave 4s and you do the retrace off of wave 2. Okay, let's take a look at wave 5s. Oh boy, you'll get this too. So wave 5s, and I love computing wave 5s. I just love them. So a wave 5, and I'll show you on the chart when we come up with an alternate price projection. You go all the way down from the bottom of wave 1, all the way up to the top of wave 3. And once you have the wave 4 is in, that's where you click your third click. And that will give you your extensions right here. So what you've got right here, this is 38% of the entire move up from the bottom of 1 to top of 3, 8%, same deal, and 100% from all bottom of 1 all the way up to 3 and measured from 4. Okay, another way of doing it, secondary way of doing it, this is my favorite way right here, and this way. You can measure from the bottom of wave 1 up to the top of wave 1 from the bottom of wave 4, and you can see these are the numbers right here. And on your sheet, you'll see these are your 2 primary numbers, and these are your 2 primary numbers. So you're just measuring from the bottom of 1 to the top of 1, pull it back to the bottom of 4, and you get those numbers. And my very, very favorite way of doing this is a 1.27 and 161.8 of 3 versus 4. And the typical wave 5 target is either 38%, well, I've got it above. I guess it's a little bit redundant. And there is not a minimum wave 5, and there is not a minimum wave 3. Now, remember, wave 3 cannot be the shortest wave. It can be the same length as another impulsive wave, but not the shortest wave. Okay, so this is just a continuation. Wave 5 usually completes near one of these projections. And what happens, folks, when you do these, when you start doing this, you're going to get a zone, a tight zone that you can look at. And why do you want to know this? You want to know this because that's a place where you want to start thinking about trailing your stops or maybe getting short if you get some kind of corrective pattern that kicks in there. So wave 5s are like waves 3 or 1. You can put your fractals in there. Remember, it's going to be normally 5 waves up. So you can start using those fractals to get you even tighter zone on where the wave 5 will end. I guess this is kind of contradicting myself. Wave 5 target 100% of the ultimate price projection of wave 3. But like I say, wave 5 really don't have a maximum unless a wave 3 is the shortest wave. And then wave 5 would come in equal to the length of wave 1. smaller time frame in the wave 5 of 5. That meant I was talking about the fractals within a wave 5. So let's see if I can make this more clear to you guys. Okay, and I put one on here. This is bonds. I just wanted to show you on this chart here, we've had a nice 1, 2, 3 down. We're in a wave 4 pullback. As a matter of fact, in the ES Live chart room, we're trading this chart right now with some TLT puts. But if this is a wave 4, let me show you how I computed the wave 5 or a possible target zone for wave 5. And I'd use this. Let's say I wanted to do a put debit spread on bonds. This would help me get that trade. Sorry about my clock again. So let me let that finish ringing. Okay. So wave 1 from wave 4. Okay. That's this move down here. First click, second click, third click, and you get the number in here. It's hard. I know it's hard to read on these white charts, but that comes in at 148 spot 30 on here. The 1.27, 161.8, you may put the extension on from here, and you get an extension down here, and you can see that's 149 spot 14 and 144 spot 22 on here. And my favorite one is wave 1 versus 3. Start here, measure all the way down from here, bring it up to here, and you get this one. You get the 61.8. It's 146.09, and this is your zone right here, where you would expect this wave 5 target to end. Oops, you would expect it to end right there. So 3 ways. Okay, let's do the first. My favorite is 1 through 3. Second favorite is 3 versus 4. And then the third one is you measure 1 down and you measure from the top of 4 right here. And the other thing is this 5th wave down should be 5 waves. So any questions about that? Okay, let's take a look at ES. So this is from the May low right here. And this is what's over in the, when we do our morning briefs, we're using this chart a lot. So we've got 1, 2, 3, 4, 5. So why do I think this is 5 ways up? And remember, when we have 5 ways up, what should we get next? A 3-wave correction. So let's just go through them real quick here. Favorite way, start here, up to 3, and pull back to here using those numbers that I showed you on the rules of wave 5. And you'll see you get the 61.8% right here at 44.60. Okay, other way, 1.27, 61.8% extension of 3 versus 4. And there it is right there, 44.8369. And you can also try to use the measure up from the bottom of 1, click on your extension, on your alternate price projection tool from the bottom of 4 right there, and you'll get the range right here. So again, and this other thing, if I had a lower time frame chart, I could count 5 waves in here, and I could also put projections on this to get an even tighter range on this. So to me, looking at this, and I don't have the oscillators on here or the weekly chart, but if a correction is 3 waves, and this is an A, 5 waves down, and this is a B, 3 waves up, you're going to get a wave 2 pullback, because this is the first wave up, next wave back, next wave down. So that's the way that I used get that target right there. And there's some other things too, the other fib symmetry that you can do and put on this chart. And we'll talk about that in another webinar. Okay, last one, TLT. Okay. 5 waves. 1, 2, and then I started counting. The fifth wave 3s are 5 waves. 1, 2, 3, 4, 5. So I was trying to find this 5th wave right here. So let's just look at the different ways here. Bottom of 2 up to 3, and you measure from here. So click, 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 and you start getting your zone in here. Okay, 1.27, 161.8 extension here versus here, and you'll see it right in there. There's a 1.27, 161.8 right there. And the last one is you measure from the top of 1 and measure from the bottom of 4. And you got a zone right there. Now, look where price went. So now we're in a wave 4 pullback. And you can see the wave 4 happened. And that would have been measured from here all the way up here. I don't have it on the chart, but I will guarantee you it's in one of those fib retrace numbers that I gave you. And it's also A, B, C to get the wave 4. So those are examples of that. Over on the educational portal, there is the little webinar I mentioned on how to use the fib tools. Also, the end of wave cheat sheet is over there. You guys can take a look at that. And I posted the educational portal link right here. So questions. If you're have chance, you can come over to the ES Live chart room, and we do this stuff every day. In fact, I will bring over, this is what we're looking at right now over there. And, I wanted to show you this. And this is a live chart right here. So what we were looking at off of this B wave from this morning, right here. Let me show it to you again. Right here, C waves are 5 ways up. 1, 2, 3, 4, 5. Now what I'm going to do, I'm going to show you guys. I'm going to actually do these on this chart with nothing on here so you can see it. So for measuring wave 5s, I'm going to go over here. I'm going to pull up this tool I've got, and it's just the alternate price projection tool or your extension tool, whatever platform you're on. I'm going to start at the bottom of 1, up to the top of 3, and pull back. Okay, so that would be your minimum target for a wave 5 up right here. You can see we haven't quite got there yet. So the other tool we can use is 5 versus 1. You get another target right here, and a 1.27, 161.8 extension. So what I've got now, I'm starting to get some levels that come in right now. And what I'm looking for is some clustering right here. I don't know, I'll let my red box go in there. But anyway, I'd be looking at these levels right here for the bottom of my zone right here. So you can either take these down further, and you can go 1, 2, 3, 4, and do the whole thing over again. You put in your 1.27 from here, and you're starting to get some solid resistance zones here. And I also know, guys, from these smaller time or higher time frame charts, that the 100% of this A versus B right here is right there. So I've got a pretty good idea we're getting to the top, or this top could already be in. So that's the way we use these things. So that's a good live example right there. If you want to take this webinar and look at it, but have that cheat sheet in front of you and you can practice with these things. But again, the best way to learn these things is just to come over here and we do this stuff all the time over here to try to get trade setups and I think it's more about teaching people how to use these things more than trade setups even over here. So anyway, that's all I got, and I appreciate you guys taking your time to listen to this.